Good day, welcome to today's class. If this is your first time on this channel, please click the red subscription button below this video to subscribe to my YouTube channel so that when I drop more educative content, you'll be able to get notified. So, in today's class, we'll be treating capital gain tax. If you watch my video on capital allowance, I made mention of something we called balancing charge and balancing allowance. If you have not watched that video, I'll drop the link right here under this video. But let me explain it for those that are just coming for the purpose of capital gain tax. Now, when we say balancing charge or balancing allowance, let's say you bought an asset for 10 million naira. So you bought the asset for 10 million naira and government has given you relief. Yes, government has given you relief. They have relieved you, let's say, of up to 5 million naira from the assets. So definitely, after you receiving relief of 5 million naira from the asset, the worth of the machines or the worth of the asset is now 5 million naira. So maybe in a particular year, you now decide that let me sell off these assets. So you sold the asset for 7 million naira. So that means that you are making a gain of 2 million naira because the value of the asset, because you have received compensation of 5 million from the asset, and now the value of the asset is 5 million, but you sold it for 7 million. That profit that you make on selling the asset is what we called balancing charge. So government is going to charge tax on that profit. And on the contrary, if the value of the asset is 5 million naira and you sold the asset for 3 million naira, that's actually a loss. So in that situation, the government will give you balancing allowance. So that is the concept behind capital gain tax. Capital gain tax is just the tax government will tax you on the profit you make on selling assets. Yeah, and whenever we are dealing with capital gain tax, we deal with capital gain tax is calculated based on current year basis. Yes, I've explained preceding year basis. That's why you need to watch my video on basis period, preceding year basis. But capital allowance is calculated on current year basis. That means that if you sold an asset for 10 million naira in 2012, it is in that 2012 you will remit the tax or the capital gain tax to the federal government. So if I'm selling off my asset in 2024, it is in 2024 I will remit the tax and whatever to the FIRS officers. So that is what we mean by capital gain tax is calculated based on current year basis. But there is a format, and I'm going to explain that on the board now. There's a format. How do we go about the format? Now, when we want to calculate the capital gain tax, the first thing we need to do with the sales proceed. Sales proceed. So the sales proceed is the amount you sold the asset. Maybe it's for 10 million and all of that. But when you want to sell off your asset, you surely incur some expenses. Yes. Yeah, we call them rent. Wholly. The expenses you are going to subtract from your sales proceed are expenses that are wholly. So the expenses that you will incur or the expenses that will be shown in your calculation are expenses that are wholly, I said WREN, W-R-E-N, wholly, reasonably, exclusively, and necessarily incurred in the sale of that asset. That means that if I'm selling any assets and I can't go and bring expenses that are related to something else, I can't go and bring expenses that are related to trade. Yeah. If I'm selling an asset of 10 million naira, I'm only going to include expenses I incur during the time or for the purpose of selling that asset. Yes, expenses like advertisement. I can make advertisement. Maybe advertisement is 1 million. Advertisement. These are expenses I incurred. Money I spent for me to be able to sell those assets or any assets are expenses that will be shown in your calculation. So there are some times whereby the question might be a quite confusing and go and bring expenses that is not part of selling off an asset. Please don't include it. That is why I said it must be wholly, it must be reasonably, it must be exclusively and necessarily incurred in the process of dissolution, or sorry, in the process of selling off the assets. Now, so let's proceed. We have the sales proceed, then you will now less the allowable expenses. So you less the allowable expenses, less allowable expenses. What are your allowable expenses? Allowable expenses include advertisement costs, advertisement, yeah, the cost of advertisement. When you less advertisement, you can have agency fee, and so on. Agency fee, so you add it together, then the total will be brought here, which will be subtracted from your sales proceed. Then when you subtract it from your sales proceed, you will get your net sales proceed. So how do you get your net sales proceed? Your net sales proceed is your sales value, yes, or your sales proceed, the amount you sell an asset less the expenses you incur relating to selling that asset. So that is what will give you your net sales proceed. So after getting your net sales proceed, because what we want to calculate exactly is how much gain you make from selling these assets. Yes, you bought an asset 10 million naira and you are selling it for 25 million naira. So we want to calculate how much gain. You bought an asset 10 million naira, you're selling it for 25 million naira. So definitely that's 25 million minus 10 million. You made a profit of 15 million from selling the asset. So that is what we want to calculate. So our calculation is not yet complete, not until we subtract the cost of the assets. Then when we subtract the cost of the assets, we get the gain that accrue from disposing or selling us our fixed assets. So we will now proceed. We will have less costs of assets. So there are some costs that might be incurred alongside the asset. For example, now imagine you bought a land for 10 million naira, and at some point you had to build a building on it or build something on it. All these are costs that are incurred in line with the asset. So they are part of the cost of asset. Yes, if you buy an asset, you spend 2 million naira for it to be able to be brought from where you bought it to where you are going to be using it, or you spent money for it to be refurnished, you spent money for it to be, all those expenses that are related with the assets when you bought them, they are part of the cost of the assets. So what do? You will add them plus the cost of assets, yes, because they are money you spent in the process of acquiring the assets. So cost of assets, you can add let's call it improvement fee. Improvement fee, that the money you spent to be able to improve that asset is what we call, I will tag them as improvement fee. Yes, you bought computer, but at some point you need to get some software to install on the computer so that they can work faster. All these are improvement fees. So then you sum it up, the total will be brought here, then you subtract it from your net sales proceeds. So you get what you are going to get is your capital gain. So capital gain is 10%. So capital gain tax at 10% of the amount, then you get your capital gain tax. So this is the format for solving capital gain tax, for computing capital gain tax. So let's take a question together, because it is not yet complete if we don't take a question together. Let's take a question together and let's see how we can maneuver things and solve things. So the question goes thus: Dr. Mensah acquired a land for 10 million naira in 2020. He spent 15 million naira to construct a duplex on the land. Full stop. In 2024, he sold the house for 90 million naira, incurring the following expenses alongside. So agency fee is 750,000, advertisement is 250,000. So they ask us, calculate the capital gain tax for the relevant year of assessment. Calculate the capital gain tax for the relevant year of assessment. So looking at this question, what is the first thing we need to do? Dr. Mensah, let's write the name of the person that is concerned with the calculation, which is Dr. Mensah. And which account are we preparing? We are preparing a capital gain tax. So computation of capital gain tax. Computation computation of capital gain tax. Now, for which year of assessment? The year of assessment is very, very, very important, because if you go back to the question, they said calculate the capital gain tax for the relevant year of assessment. If you write it back to the examiner that computation of capital gain tax for the relevant year of assessment, the examiner will score you 0, because you are expected to state the year of assessment. And I said it earlier on that in computation of capital gain tax, we use current year basis. That means that it is the year you are selling the assets that will be your relevant year of assessment. So from this question, in 2024, he sold the house for 90 million. So he sold the house in 2024. So that's our year of assessment. Computation of capital gain tax for 2024 year of assessment. So let's put it that way. Computation of capital gain tax for 2024 year of assessment. So from our format, the first thing we need to get is our sales proceed. So Dr. Mensah acquired a land for 10 million in 2020. He spent 15 million to construct a duplex on the land. In 2024, he sold the house for 90 million. So that's our sales proceed. So he sold the house, sales proceed is 90 million naira. 90 million naira. 90, yeah, that's our sales proceed, 90 million naira. So now what are the next thing we are going to do? The next thing we are going to do is to learn the expenses that are wholly, yes, exclusively and all that incurred in the sale of the asset. So what are those expenses that are incurred? You can see it there. Agency fee 750,000, advertisement fee, yes, the agents that help us in in looking for buyers need to collect something, that's 750,000. Advertisement, we advertise for the asset to be sold. All these are expenses we incur. So let's less it. So less allowable expenses. Allowable expenses. So what are the allowable expenses? Allowable expenses include agency fee of 750,000. 750,000. Then advertisement for 250,000. So if we sum the two up, that's the expenses we incur for us to be able to sell the asset. If you sum the two up, that will give us 1 million naira. So subtract it from your sales proceeds to get your net sales proceeds. And if you take away 1 million from 90 million, you will get 89 million. So this will be your net sales proceed. And the next thing you are going to do is to subtract the costs of the assets and alongside expenses incurred in getting the assets. And if you look at the question, go back to the question, it said Dr. Mensah acquired a land for 10 million naira. So costs less cost of assets. Cost of assets is 10 million naira, and he spent 15 million to construct a duplex. Yes, the 15 million he spent to construct the duplex is to be able to increase the value of that land, and it's also part of the costs. So duplex construction, let's put it that way. Duplex construction of how much? 15 million naira. So if we sum up these two, 15 plus 10, that will be 25 million naira. So 25 million naira. So at this point, we take away 25 million plus from 89 million, we get 64 million. And this 64 million is the capital gain. So the capital gain on this asset is 64 million. So from this 64 million now, what do we have to do? We need to complete our capital gain tax. And how do we do that? To complete our capital gain tax, charge 10% of the capital gain to give you a capital gain tax. So capital gain tax, so 10 over 100 times 64 million. And 10 over 100 times 64 million. I think that should be 640,000. 640,000 as our capital gain tax. So this is how to compute capital gain tax, computation and everything. But this is not the end of the class. It's very simple. Yes, I know at this point you have some level of understanding, but in our next class we'll be doing capital gain tax with connected person, capital gain tax on hire purchase, capital gain tax, different aspects, and you don't want to miss it. Subscribe to this YouTube channel, and I will see you right away in my next class. Thank you.